Shares of Dixon Tech trade higher as it forms precision component manufacturing joint venture with Chongqing Yuhai. Also enters the camera module manufacturing with the acquisition of 51% stake in Q-Tech India. Brokerages CLSA, JP Morgan and Nomura are bullish on the stock. Network 18 trades with gains of over 10% after reporting a profit versus a loss in the corresponding quarter last year. The company's operating cost falls 5% while viewership share rises. HDB Financial's shares fall as profit and disbursements dip in the first quarter. AUM growth remains modest while asset quality was hit by the commercial vehicle segment. Shares of MAS Financials trade higher as Nippon India Mutual Fund raises stake in the company, buys nearly 20 lakh shares or 1% equity for about 61 crore rupees. And ICICI Lombard rises as the first quarter profit for the company increases 29% to over 740 crore rupees. Management, however, tells CNBC-TV18 they're seeing increased competitive intensity.
Hello and welcome to Chartbusters. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel. With me is Mangalam, and the headline index, well, it's a little bit under pressure. We're down close to 50 points, but the story yet again is in the broader markets because the number of stocks advancing are better than the stocks that are declining. And as we have seen the last couple of trading sessions as well, the small cap index has rallied more than 2% in a week that the Nifty hasn't done much. Hey, Mangalam.
Nigel, all the indices above my head, Nifty mid-cap and the bank index doing a lot better.
These guys,
you'll have to just support them. You'll just have to support them because really no concerns out here. Yeah. You know, yesterday we did fairly well. Yes, the last 4 trading sessions were weak, but yesterday we recovered from those lows, and today as well, while we are lower on the frontline index, the broader market is doing a lot better, 1,500 stocks which are higher. And even in the frontline indices, a lot of stocks are putting good gains. You have HDFC Bank, a key weight on the index, up around 0.2%. IT stocks are bettering themselves for the last 2 trading sessions. So Wipro is up around 0.8%. And we are seeing continuous up moves in a couple of these FMCG names. Case in point, something like Nestle India, which is up 1.5%. And the broader markets doing a lot better. Titagarh Rail Systems, for one, is up around 1.5% as well as we speak this morning. Chandan Taparia of Motilal Oswal Financial Services joins in for a quick technical check on the market. Chandan, we've been consolidating, grinding lower from lower levels, seeing a bit of an up move. Now we're lower by 50 points. Do you think this dip is worth buying?
Good morning, Mangalam. Thanks for having me. So I believe that the market is likely to consolidate, but the good part is yesterday it negated the lower top, lower bottom of last 4 or 5 days and formed the bottom near 25,000 marks. In fact, we have seen put writing at 25,000 and the index is also holding well to its rising support trend line. Earlier, 25,000 used to act as a key hurdle. Now the same can provide some support. So I believe with support of 25,000, index has potential to remain positive to range bound for an upside move towards 25,400. And to talk about Bank Nifty, that also negated the lower top, lower bottom, holding the gains, but comparatively follow-up is missing. With support of 56,750, Bank Nifty has potential to rally towards 57,500. So in both indices, looking for some positive to range bound bias, while at the same time, stock specific and selective sector can do well in this scenario.
Okay, let's hear then the stock specific action that you have, Chandan.
Yeah, good morning, Nigel. Thank you. So first trading idea, that is buy on Paytm. The stock has been making higher top, higher bottom from last 4 or 5 trading session. We have seen built up of long position and now counter is heading towards the fresh leg of rally. In fact, on the monthly and the weekly chart, the setup indicates fresh leg of rally. So recommending to buy for an immediate surge towards 1,050. One can buy with support of 990 level. Second idea, that is buy on Titagarh Wagon. We have seen open interest addition of around 3 to 5% in the counter. And a small follow-up could see the next leg of rally. In fact, on the daily chart, we are witnessing a pole and flake kind of pattern, which has bullish implication. So recommending to buy on Titagarh Wagon with support of 940. And here this stock can head towards 4 digit of 1,000 marks. Last trading idea, that is buy on LIC Housing Finance. A long consolidation breakout of almost 12 weeks is now coming for a fresh rally. We have seen short covering. Call unwinding started to witness with higher base in the counter. So recommending to buy on LIC Housing Finance with support of 615 for an upside target towards 660 marks.
All right, Chandan, thank you so much for joining in. A lot of these small cap names also buzzing the cash stocks. Pull up Tilaknagar Industries. That's the one which is up around 7%, has done well this week, up around 12% for this week. We have also seen some traction in Protean e-Government. Remember, that stock was down and out and now has seen some recovery from the lows, up around 5.5%. And Godrej Industries, that's the other one that I'm looking at right now, up around 5% for that stock as well. So there is Tilaknagar Industries doing well. We have Protean e-Government and we have Godrej Industries, which is up around 5% as well. So in a market like this, what are the ideas for profit? Let's go across to our colleagues at Money Control Pro who are joining in with some ideas for profit. Khushbu Rai joins in with the stock.
In today's idea for profit, we have Home First Finance Company, a key player in the high-growth affordable housing finance segment. For Home First, early adoption of technology and strategic market selection has driven scale as well as profitability. The focus on emerging states like Rajasthan, UP and MP will further drive penetration in high-growth regions, which will drive sustainable growth in the medium term. The company has also maintained strong focus on improving the collection efficiency and reducing early bucket delinquencies, both of which has supported the asset quality in FY25. The recent capital infusion and credit rating upgrade is expected to lower the overall cost of borrowing and drive net interest margin expansion. Home First productivity is unmatched thanks to the technology investment, and we feel that the steady NIMs and credit cost and lower leverage will drive return on asset in the coming period.
All right, with that, let's tell you a programming note as we move into this short break. Remember to tune into the all-new CNBC TV18 Prime, which brings you insights from policymakers, business leaders, economists, all of them shaping both India and the world's future. CNBC TV18 Prime decodes global shifts and the impact on Indian businesses, gives you unparalleled insights. You can tune into CNBC TV18 Prime at 12 noon for Global Reset, at 1 p.m. for Big C, and the Global Lens at 8:30 p.m. all weekdays and weeknights.
Welcome back. You're tuned into Chartbusters. Let's focus on a couple of stocks that are buzzing around. Biocon has received an approval from the US FDA for diabetes drug. Ekta joins us to fill us in with details on that. Ekta?
Well, yes, an important approval for Biocon, which has come through, where they've received approval from the US drug regulator for their biosimilar insulin aspart, which is basically used for diabetes. Now, this particular approval was pending for some time now because they had received a complete response letter from the US FDA, which had brought up some amount of issues with regards to the Malaysia facility where this particular drug was being manufactured, and this took place in 2022-2023. Eventually, the Malaysia facility got re-inspected in September of 2024, and now they've received the US FDA approval for insulin aspart. Remember that they've already received approval in other markets such as Europe, and they have been selling it in other markets such as Europe already. Now, in terms of the size, it's around $1 billion in terms of market size for Biocon in the US, and it is possibly expected to be around $100 million opportunity for Biocon. But based on market dynamics, such as the kind of competition that they would probably see from the innovator itself and the changing landscape of diabetes drugs, the opportunity could probably even go up to $300 million, however, contingent on a lot of factors.
Thanks a lot for that, Ekta. Well, let's focus on the other buzzer. That's Dixon Technologies, buzzing in trade on the back of a new acquisition and a JV as well. Vinny joins in to fill us in with more details on that. Vinny.
Hi, good morning. So yes, we're seeing Dixon Tech that's in focus, buzzing in trade. Like you mentioned, one is an acquisition, one is a JV announcement that's come in. Now, the acquisition, they're acquiring 51% stake in Q-Tech. This Q-Tech company, what does it do? It's among the top 5 camera module suppliers, and in India, it's one of the largest. So this acquisition is a backward integration for the company, but this adds value to the company. They've been focusing a lot more in terms of backward integration. So value addition comes in on the smartphone front for the company in terms of manufacturing and manufacturing components as well. Now, the other announcement, that is the JV that they've signed as well. This JV is a 74% JV that Dixon will hold, and the 26% JV part will be held by Chongqing, which is a precision component manufacturer. This is mainly where is these components used? They're used in mobile phone, laptop, Internet of Things devices, automotive applications as well. So a lot of this will be used internally for them, and backward integration again in terms of this is a positive. Now, obviously, do not forget in the recent time they had HKC JV as well, which was for a display module of phones as well. So that was also a positive there. And because of all these JVs and acquisitions, this is a positive coming in here, and brokerages are also giving it a thumbs up. Now look at what CLSA is saying. Outperform rating, target price of 19,000 rupees. And what they're highlighting is that this JV will add value to Dixon. That would be around 45% to 55%, I beg your pardon, from the 15 to 17% that is currently there in terms of value addition. So sharp rise there, increase in terms of margins by 150 to 200 basis points is what one could see coming in. Even JP Morgan is saying that this backward integration will get completed by Q2 FY26. That would be a positive and add to the revenue of the company in FY26. Additional revenue would be around 2% for FY26, 3% for FY27, and margins also improvement in terms of margins. Nomura also is giving it a thumbs up, and that is why positive notes, backward integration, overall a positive for Dixon Tech.
All right, positive for Dixon Tech, and that's reflecting the stock as well, up around 3% right now. Just keep an eye out on a couple of other stocks as well, which are spiking right now. We have Delivery, which has moved to the high point of trade. Kalyan Jewellers has been doing well all through the morning and currently has now surged to the higher point of today's trading session as well. And it's a big recovery from the lows that we're seeing on a name like SML Isuzu. Remember, the stock has seen a big rally already, but now if you pull up the intraday chart of SML Isuzu, you would see that there has been a recovery from being down almost 4.5%. The stock has moved into the green.
Yeah, right. Mangalam, another company, TFS, has just listed the travel food services company. Yes. I recall you saying that from the highs, it hit a high, opened up in the green, and then it corrected last couple of trading sessions. In fact, on the listing day, it ended in the red. It appears the initial sellers, they seem to be absorbed out because today as well, the stock had opened up in the red, but TFS, Travel Food Services Company, I think we should get that stock up. It's popped up in trade, so just keep an eye out on that particular name as well. The new listing, suddenly it saw a bit of a spike from around 10 a.m. odd. And the other one is Vascon as well. Small EPC company that's moved into real estate. That as well has seen a bit of a bounce, and it's moving on rather large volumes, not just today, but the last few trading sessions, it's seen a bit of a spike up.
All right, let's move on and let's get you some important exclusive conversation. In his first television interview since taking charge, the RBI Governor Sanjay Malhotra says he's not allowing foreign banks to own a 26% stake in Indian banks defies logic. In an exclusive conversation with Lata Venkatesh, he promised that the RBI will examine cases if there are requests. And the governor was also asked about this in the context of, remember, Dubai-based Emirates in NDB Bank potentially picking up stake in private lender RBL Bank. Here's what he had to say.
There are two foreign banks wanting to buy stakes in Indian banks. SMBC, the announcement from Yes Bank has already come and they are awaiting your permission. Right. Now, hitherto RBI had only given permission to foreign banks to cross that 15% when the bank was in trouble, like in Catholic Syrian's case or in Lakshmi Vilas, where of course DBS bought the whole bank. Now, Yes Bank, you have the odd situation of State Bank having, its own banking license and owning 24% in Yes Bank. So, RBI probably wants that to end. But in the case of RBL, we understand NBD is very interested. So what is, first of all, have the cases come to you? And more importantly, if you are going to give permission, like even IDBI is apparently, the interested parties all want 26%. So as a rule, will you want to change from 15 to 26?
See, as per the FDI policy, the foreign banks are allowed up to 74%, yes. All right? And the foreign banks can actually start business in our country as even up to 100%. So that's even more than 74%.
But they don't want that. They want to get into, established Indian banks.
Yeah, so, Indian promoters are already allowed up to even more than 26% stake, to be brought down to 26% stake within a period of 15 years.
Yeah.
Voting rights, of course, because of the Banking Regulation Act, cannot be, even if the share financial stake is more than 26%, cannot be more than 26%. So even foreign banks can certainly have 26% stake, economic interest, voting rights.
Yeah.
There should not be any difficulty in them having up to 26% stake in a bank, in an Indian bank.
Okay. No, it's just that until now it was only
They
given.
have not come. So we have not, your question as to whether some cases have come to us for having 26%, they have not. But if they come, we will certainly, we are already reviewing the policy, as you are saying. There is some kind of, clarity is not there, some ambiguity is there, as you are saying.
No,
We'll try to bring in, these clarifications and bring clarity in these guidelines.
Okay. And no, until now at 15%, it was kind of a hard stop. And case by case, Reserve Bank was allowing. So I'm just asking if that 15% hard stop.
As I mentioned to you, for foreign banks, they can go up to 100%. So if you don't allow them even 26%, that kind of seems to defy logic.
All right, with that, we'll take a short break, come back on the other side, more news and updates. Back, markets actually not much changed from the time when we started this show for the frontline index, though we have a couple of stocks which are spiking from the broader markets. We have Patanjali Foods, which is up around 3.5%, a stock that was buzzing yesterday as well. The board meets tomorrow to consider bonus. Titagarh Rail Systems, which was one of the picks that Chandan gave us, that too has moved to the high point of trade. And we are seeing some traction in Samman Capital. That stock too has moved to the high point. On the other side, there are some stocks which are seeing some profit booking. So we have Nykaa, which has moved to the low point of trade. Marico is doing, weekly in today's trading session, or rather well asked for rather than well bid, which is why it is at the low point at a time when all the other FMCG companies are doing well. And AB Fashion and Retail is the other one, which is lower as well. But let's go across to Vivek now. He joins us to tell us something about Veranda Learning. Vivek, it's a fundraise that the company is eyeing?
That's right. It's a fundraising spree across, most promoter-driven companies. So what we understand is that, Veranda Learning is in the market. They're looking to raise funds. And the mode that the company will be looking to raise funds is most likely going to be via the QIP route. In fact, we understand from our sources that the QIP could be launched as early as this week. The company is looking to raise close to 380 crore via the QIP. And we understand that the majority of the proceeds of this particular QIP would be used to retire debt. Now, the company has close to 340 crore of high-cost debt that they're looking to retire. Now, given the fact that this particular QIP and the quantum of the QIP forms a significant part, in fact, of the current market cap itself of the company, we understand that there could be a significant discount to the current market price in order to go ahead and attract investors to go ahead and participate in this particular QIP. So Veranda Learning looking at raising close to 380 crore via the QIP route. We understand that this will be done as soon as this particular week. We reached out to Veranda Learning earlier today. We are yet to receive a response from them. It will be interesting, number one, to understand the quantum, the usage, as well as what will be the actual discount to the current market price that the company will be offering the investors. We understand that there has been interest from large HNIs as well as family offices for this particular QIP.
All right, Vivek, thanks a lot for that. A QIP, a fundraise coming in from Veranda. The key point to note is that this will be used to retire debt, but more importantly, the offering itself could be at a significant discount to its current market price. With that, we'll leave you on this edition of Chartbusters. Thank you so much for watching. On the other side of the short break, you have the team of Trading are taking all the market action forward.